Me, no, I've sent it out to a couple of people, but it's what it is.
People are enjoying this weather, I'm not gonna lie. That Friday was quiet.
I hear that.
6 people.
Got it. Okay, we are live. Sabinas, we're live. We gotta go straight to this disclaimer because we ain't trying to get no court cases.
We don't want to get any court cases. Don't see us, guys, because. Oh, can you hear me, please?
Oh yeah, my bad.
You got St. Jerome, Research King, B. Will the Great, a homie from America. Got 2 people in the waiting room for the men. Okay, let's go.
Josh is in double time. I love that.
Good evening, good people. It is currently 3 minutes past 8 p.m. UK time, Monday, the 18th of April, 2022. If you are listening to this on Apple Music or any audio platform without visuals, recommend you do check the full video so you get the most value at youtube.com/blockchain-sensei. Like, subscribe, comment. For those that aren't aware, every Monday, we do a free Zoom webinar called The Game, where we cover weekly updates on stocks and crypto. That's every Monday, UK time, 8 p.m. to 9:30. Register your free tickets to this webinar, one of the greatest web shows on earth, in the blockchain.sensei Instagram bio. You just click on our link tree in our Instagram bio and register your free tickets. Also, Fridays, we do NFT Fridays. That's 8 p.m. to 9 p.m., same Zoom link. And let's get this disclaimer on. Okay, so disclaimer. All our content is for education, information, and entertainment purposes only. No information should be considered investment advice or a financial recommendation to buy, sell any assets, or place any trades. Please always do your own research. It is very important to do your own analysis before doing any or making any investments based on your own circumstances. Please always take professional advice from a professional advisor or independently research and verify all and any information you may find in our content that you wish to rely upon, whether you wish to make an investment decision or otherwise.
You want to start up the Twitter space?
Oh wait, don't you usually do the rest of the?
Yeah, disclaimer? But I want you to start up the Twitter space so we can do the disclaimer for the Twitter.
Okay, for sure. 1 second.
So that way no one can say we didn't do it, because on Instagram I can just do the little picture thing in it like this right now.
Okay, no worries. Let me just host. Okay, 1 sec. The game. 1 sec. Let me the game. Every Monday, 8 p.m. till 9:30 p.m. UK time. And then this episode's called 1 second. It's called What to Do in a Recession. What to do in a recession. What to do in a recession. And how to identify when whales buy and sell assets. Join Zoom down there. Register ticks to next week, Monday, 8 p.m. plus UK. Let me start this Twitter space. 1 sec. Copy.
Can't be joining as a live like this. I'm just shouting at the people on IG. There's people on IG seeing this title and then staying for 30 seconds and then getting off. It's wild, that. It's wild. It's actually wild. Because then it makes me think, if you stay for 30 seconds and then get off, it means I would presume that means you got it patterned for when it happened. I would assume that means mans know about Wyckoff distribution. But, me personally, if I was just strolling around on IG and then I saw this as a little title, I'd be like, yo, hold up. Let me just be around for this one because it looks like it's going to be some important information. Well, you know.
Yeah, with the tweet.
Are we live?
One sec, almost.
I'm giving the IG peeps a little preview. Oh, there's game in here, y'all. There's game in here, y'all.
We live on Twitter yet? Second, let me in my space.
Yo, show some love for that game.
All right. We're good. Okay, cool. We're officially live on Twitter. Are we live on Instagram as well?
Live on Instagram as well, bro, and on YouTube. So
let's start again. Okay. Good evening, people. Disclaimer. All our content is for education, information, and entertainment purposes only. No information should be considered investment advice or a financial recommendation to buy, sell any assets, or place any trades. Please always do your own research. It is very important to do your own analysis before doing any or making any investments based on your own individual circumstances. Always take independent professional advice from a professional advisor or independently research and verify all and any information you may find in our content that you wish to rely upon, whether you wish to make an investment decision or otherwise.
That is simply because all investments come with risk. What is the risk? That you end up broke. You broke up your ass. All the investments gone, done, finish. And then you're out on the street and you're like, no, I should have, that investing stuff's really bad. And then what you'll see is everyone else will be buying up the dip and then becoming millionaires. And you'll be like, oh, I wonder how they did it. Well, today's episode, we're going to show you how they did it. But the first thing you got to understand is you got to learn how to mitigate your risk. What does that mean? You need to understand that anything you're investing, you need to be able to throw away. Basically, put it down the toilet. So we are not financial advisors. We are financial entertainers. We do not intend to be perceived or received as financial advisors. However, we are working in collaboration with several accredited advisors. And if you are unable to mitigate your risk, please contact us and we can put you in touch with one of these advisors. Cool. All right, cool. So let me go to the news. And on the news, let's just. Thank you so much. You are the most intelligent individual I've ever come across. Oh, he left.
Yeah.
Oh, fair enough. Well, so on this note of financial advisors, let's just start here. So this is Proppy. Proppy did a 200% return on investment if you bought it on the day that I put it on my Instagram story. And if you bought it, when did we talk about this? Oh, yeah, we talked about this in October for £10 in a live event for anyone that have purchased or attended the top 10 altcoins. If you purchased Proppy, well done. It should have been a bit of a sign when Proppy landed on Coinbase. That was kind of the sign that, things are going on with Proppy, you know what I mean? So congratulations to anyone that got a nice little banger on that, because you should have set your take profits along the way. So congratulations on that one. Don't know if any of the financial advisors that are actually accredited advisors or asset managers that are out there know shots, but I don't think they would have been telling you about that one still. Anyway, let's get on to the news. So one of the key pieces of news that I keep trying to address that nobody seems to want to address is I'm going to let this person in, and if they're a waste, then let's see what happens. So yeah.
Oh no! This is like homegirl from Holland. She always comes to NFT Fridays.
Oh, sick. What's up, homegirl? What's up? We're just very wary of the fanboys that we have. That
she's sick. She's like one of my store's friends.
Oh, see. So yeah, anyway, Coinbase NFT has 3.7 million users signed up on their waitlist. This number is triple the amount of wallets interacting with NFTs at this moment in time. NFTs are going to take ETH to a bull market, whether people like it or not. However, I came up with a theory. What if Brian Armstrong, Flo, and Yuga Labs, which own the Bored Apes and CryptoPunks and Meebits and CryptoKitties, what if they all teamed up with Ripple and launched all their NFT service on Ripple on Coinbase? That would cause the flippening. That would cause people to think Ethereum's more valuable than that XRP is more valuable than ETH. It would cause XRP's market cap to probably jump up to around 400, 500 billion. It would cause the death of OpenSea. Just saying. That's just something that I'm putting out there that people need to be.
Something overtaking OpenSea is definitely inevitable, because this is the most used NFT platform in terms of volume traded and transactions, but seemingly have terrible customer service, and they don't seem to be able to help anyone with everything. And there's just so many problems with OpenSea, so many hacks.
Coinbase, we know they've got it patterned, and then if they team up with XRP for the XRP NFTs, that will mean that the NFTs will be pretty much instant transactions because of the speed of XRP. So, this is an interesting one that's lined up, that's circling about. Now, this is a picture for perspective, which I saw and I thought, you know what, I need to post this. If the world had only $100, this is what the distribution of wealth would look like. United States would have 2940. China would have 1771. These are all the other countries. Only Japan, Germany, United Kingdom, France, India, Italy, Korea, and Australia and Spain are worth a mention. If that doesn't sum up the distribution of wealth and power, I don't know what does. How about this? This might sum up the distribution of wealth and power. Now, Ninja, I'm going to read it and I'm going to let you explain it. So this is something from Forbes magazine, and they kind of exposed Larry Fink, who is the CEO of BlackRock. So let me just read this sentence. Now, in addition to managing the primary cash reserves of USD Coin USDC, a 50 billion digit asset available on blockchains, including Ethereum, Solana, Algorand, Stellar, Avalanche, and Flow, and pegged to the value of the US dollar, BlackRock has entered into a broader strategic partnership with Boston-based Circle, one of the primary issuers of USDC.
Okay, so let's break this down. So first of all, let's just break down a problem in the crypto market. So one of the biggest problems with the crypto market is a small percentage of the market is cashable right now into stable coins. What I like to call it is the stable coin dominance. So just a random phrase that I came up with. So there's a Bitcoin dominance with 41%. ETH is a 19% dominance of the market. Well, USDT and USDC run the stablecoin market, right? So what we mean by that is, so out of a market that is 1,800 billion, so 1.8 trillion, but I'll say 1,800 billion to make it easy to understand. 1,800 billion market, only 130 billion is in stablecoins right now. So 130 billion to a 1,800 billion ratio, that's less than 10%. Less than 10% of the crypto market is in stablecoins. The problem with that is when people want to cash out into a stable currency, there's not much stablecoin to back that. So the actual stablecoin market is a growing market. The actual percentage of the cryptocurrency market in stablecoins, let me just say it for a record, in my opinion, Mr. Hardy can give me a second opinion, is going to expand from less than 10% to over 10% because it's needed, right? So with the news that came out that BlackRock will be, sorry, what's the exact wording? I don't want to misquote. Let me just go to the actual post so I don't misquote.
Managing the primary cash reserves of USDC and entering a strategic partnership with Circle, who own USDC.
Yeah. So BlackRock have $10 trillion allegedly. I say allegedly because we know that asset management companies also have offshore accounts. So there'll be a public figure of how much these asset management companies like BlackRock, like Vanguard have in assets under management. But I'm going to assume there is definitely some assets under management that is not on a public balance sheet. So I say 10 trillion allegedly because it could be more. But officially around $10 trillion of assets under management. So 10 trillion is 10,000, sorry, 10 trillion, 10,000 billion of assets under management. And if you imagine, USDC is a $50 billion market. So USDC coin, $50 billion market. BlackRock have 10,000 billion of assets under management and growing. So if they start delegating a small proportion of their assets under management into USDC, basically the whole market cap of USDC can double very quickly with this news. Now, that doesn't make the stablecoin increase in value, but increases the liquidity of the market and increases the stablecoin dominance of the crypto market.
Now, the reason I think this is a key issue is because, once again, this proves that this space is not decentralized. Like, it's not. Like, if one of the main ways to exit your crypto positions, there's only 10% of it available, and it's majority owned by BlackRock, as well as MetaMask being owned by Joseph Lubin's Consensus and JP Morgan, then it's not decentralized. Don't know how to tell people, but I think I'm just going to start bursting this bubble because people just need to know the truth. So yeah, in regards to this stablecoin issue, so obviously stablecoins are created to provide as like an alternative to holding US dollars because US dollars aren't backed by anything. However, they're backed. USDT is allegedly backed by $1 for each stablecoin, so is USDC. However, that dollar still isn't backed by anything, which means your Tether is still backed by debts, not assets. So I'm expecting a big rise in stablecoins backed by commodities like silver, gold, lithium, so on and so forth. I'm expecting a big rise in that. Or like we're seeing at the moment with Terra, stablecoins backed by Bitcoin, which is a bit of a paradox, but yeah, nonetheless. This is some news that I saw here that Meta are saying that they're going to take a nearly 50% cut of all sales of metaverse items on their platform. So I just want to give everybody a chance to type in the comments a caption for this because I thought this was pretty ridiculous. So I'll let everyone type that in. Then also Jack Dorsey's first tweet, the NFT offered for 48 million USD. Its top bid got 280 USD. I don't think the person sold it, but it kind of shows that we were in a bit of a poppy mania, or tulip mania with NFTs back there. Thank you to whoever's writing on the screen. So next is an article that I keep seeing in the newspapers. I don't read them often, but when I'm on the tube, if it's there, I'll pick it up. So something kept popping up in the newspapers, and I'm just gonna. It relates to today's session. If you're on the IG after this, I'm going to be going strictly to Zoom, so you're going to have to jump in the Zoom if you want the Zoom link. DM us. So one of the things that I'm predicting, sometimes I'm right with these predictions, sometimes I'm wrong, but just based on the research I've done on Tesco, they are in a shocking state of affairs right now, and they're down at the moment, and they're saying that they wouldn't be able to handle a crash, but if they did crash, they're finished. So who would buy Tesco? Who would want to buy Tesco? Amazon. So I'm just going to put this out there that that's a potential that might happen there. I'm not really one on shorting, especially not to short Tesco, because that's a lot of the UK's pensions, which we're going to talk about later as to what might cause a recession, and a lot of jobs in the UK. So it'll be a real shame if Tesco does collapse, but it is not in good shape at all. So yeah, that's on that one. Okay, so let's get into today's session. Once again, I'm going to close it down on IG Live. Thanks for joining us for the news. If you want to join the whole session, DM us and jump in on Zoom. That's that. Okay, cool. So let me just answer these questions before we go to it. Not a single African country. Yeah, it's pretty crazy. There's some bullshit. Amazon Fresh, indeed. Yeah. Cool. So let's go to the share screen. Bear with me. Yo, I did you guys good today. I went back to the slides, and I haven't been on the slides in a hot minute.
In a while.
In a big while. Zoom, share screen. Let me know if you can see my screen. Can we see it?
Starting to share.
Is it sharing?
Yes.
Boom. How to play the recession game. I even stepped up the game with animated backgrounds. So, first thing we got to address is, in these times, in recessions, what do the goats and whales do? They have 65, at this moment in time, Warren Buffett, I should say percent, has 35% of his portfolio in cash or cash-based assets. So he's got it in cash bonds that he can turn into cash in just quite quickly in a monthly basis. Now, this is a big sign that he can see that there's potentially a big dip coming, and he wants to be in cash to buy up the big dip. So for myself at the moment, I'm probably 5% cash. I'm probably one of those people that's very asset heavy and cash broke. I never have any cash.
Same.
Really annoying.
Non-investors will never understand. Like, don't you have all that crypto money? Yeah, but it's in crypto. It's not in fiat.
Yeah, it's really annoying. So I'm going to be now starting to go more. I'm going to start coming out of some of my positions and just going to cash. I'm going to explain how I'm going to calculate where I'm getting out of some of these positions in this call. But yeah, pretty much most positions, once they've done 100%, or they've done 500 or 10x, I won't be getting back into other positions with them. I'll just be holding the cash, waiting for the whole thing to go, and then buy into it. So yeah, the fact that Warren Buffett right now is 35% cash, 65% assets shows us that something is happening. Why? Because he's getting ready to buy up big time. So for those of you that don't know who Warren Buffett is, he's kind of one of the most, would you say one of, or the? I'm going to say the He is the Michael Jordan or Kareem Abdul-Jabbar, just because he wears glasses, of investing. He is the Cristiano Ronaldo of investing. Nobody has ever made as much money from investing as Warren Buffett. He's just the most successful. So whatever he's doing, you want to pay close attention to. And because whatever he's doing, a lot of people copy. So one of the first things we want to address is that.
Can we just rewind one slide again? Because you know me, I love conceptualizing, right? According to Mr. Harding's slide, fortune in excess of 100 billion. That means personal fortune worth more than BNB, which is only 68 billion. That's personal fortune of XRP at current market cap times 2.5.
Yeah, this guy has more personal net worth than most large companies. He's bigger than Tesco. I think he's worth more than Nike.
Yeah, is it? That's...
Oh, wait. Do you want to know something crazy?
What?
Worth more than the entire music industry.
Oh my God. Yeah, because music industry, yeah. Is
context. That's mad. So yeah, you might want to listen to what he's saying.
Jay-Z has like, or Kanye may have like 1 billion. Yeah. 1 or 2. This guy's got 100.
Plus. So corrections happen on average once a year. So we can expect a 10 to 20% drop once a year. Bear markets happen on average every 4 years. Now, markets tend to go down for the last 200 years have been recovered. All of them except for the Nikkei, which is the Japanese index, and the FTSE after the 2020 crash. So here, I've used this image before, but I'm going to use it up again. We can see this is the market since 1694 to 2004. And we can see what's happened. It's always gone up and to the right. No matter what crash happens, no matter how big it is, even world wars, the market carries on going. So World War One, Great Depression, oil crisis, credit crunch, dot-com bubble, 2008 crash, COVID. Guess what? The market keeps going up and to the right. Why? Because we have consistent new innovation. With consistent new innovation comes money. With money comes money going into assets. So as long as we keep moving forward, it's impossible for the markets to not keep moving forward. Even when it feels like we're going backwards, that's not the case. So what we want to break down is how do the whales buy assets? Because once we understand how the whales, the likes of BlackRock, who have 10 trillion, the guys that move the markets, once we understand their psychology for buying and selling, it helps us to align ourselves with the waves. So you want to think of it as, look, wherever their momentum is, you want to be going in line with that momentum. You do not want to be going against what they're doing. You're just going to drown. And when you drown, most of the time, people never try investing again. And then with the way that the world is going to be in the next, going forward after next year, if you're not investing, you will permanently drown. And if you are not investing, in my opinion, from 2025 onwards, you will never retire. Or your choices and freedoms will be extremely limited. So what do we have? First, we have an accumulation phase. So an accumulation phase is where the whales are buying up an asset. This is when the price of something is really, really low and nobody's interested in it and it's oversold. There's actually a tool that you can use that can help you tell if something's oversold. It's called the RSI, but we'll go into that another time. So what then ends up happening is because the asset's oversold, loads of the whales look at it. They look at the actual fundamentals of the asset. They actually break it down and see if it has more assets than liabilities. They see if it's making more net income, which is profit year on year, quarter on quarter. They look at these kind of fundamentals and the PE ratio and stuff like that and go, yeah, this is a great asset that's going to carry on making more money into the future. Let me buy it now because it's undervalued. They buy it, and because they've got so much money and then other people start copying them, the price goes up. Now, what ends up happening now is once the price goes up, it gets too high and it's now overvalued and overbought. And again, you can tell this on something called the RSI. And this now begins what we call the distribution phase. And this is now where they start selling. But the only way that they can sell is if there is liquidity. What is liquidity? They need people to come in and buy it from them. Who are the chumps that buy it from them at the top? Most of us. When we're new, when we don't listen, we buy at the top. Why? Because the guys that control these movements up also control the media. How do they control the media? Because they're invested in them. Just a little thing that I'll throw in there just for you guys to research. Did you know that 75% of all media ads between 2019 and 2022 came from pharmaceutical companies? Very interesting correlation, that. So do your own research into that one. I think you'll be very surprised. And also, that doesn't mean just TV ads. That can be lobbying and private funding of private entities such as the BBC. Anyway, moving on. Just in the name of good research and money flows. So this is the average idea of the Wyckoff price cycle. So what we have is we have our accumulation phase, which looks like this, where the price seems to be bouncing up and down along the bottom. And then what we have, we'll see what looks like a double bottom or triple bottom. So you can see here, one touch here, two touch here, and then it will dip below the support line. Why will it do that? Because now most people will be like, oh no, it's gone. It's a terrible price. It's gone below there. Let me never get into it. And then what it'll do, it'll go up to the resistance. Most people will then think, oh my gosh, it's broken out the resistance. Let me buy. And then it'll come back down underneath it. And people are like, oh no, I'm not going to buy it. And I'm going to get rid of this. I'm staying clear of this. And then it'll fly up. And then what happens is the distribution zone. Now in this distribution zone, what happens is the price moves sideways again. But when we have this sideways movement at the top, especially more than 2 bounces, we can now expect, guess what's going to happen? It's going to come crashing down. But how do people get trapped here? They get trapped because it goes above this resistance area here, which is this top blue line, and makes it look like it's going to go past it. And then comes down and people are just at this point going, yeah, it's fine. It's going to go back up. It's fine. It's going to go back up. And then guess what happens? It goes below the support line, but because it comes back above the support line, people get back in and go, no worries. It's going to go back up. And then guess what happens? It goes down even further. So please try and recognize this pattern because it's a very, very important pattern that happens time and time and time again. We have accumulation zone and distribution zone. This is the key concept that I'd like you to try and understand. So the 4 market phases that every trader must know, trader, investor, anyone looking at any charts or any assets. We have an accumulation zone, an advancing zone, a distribution zone, and a declining zone. So the accumulation zone can range after a 6-month decline. So after a 6-month downward period, it will go sideways, which is called a consolidation. Now, this yellow line is the 200 moving average. Again, I'm going to say that 200 moving average, which is also a good strategy and a good indicator to see when is a good time to buy an asset because it shows the price on average over 200 days. So if the price goes over the 200 moving average, that's normally a good time to buy. If the price goes under 200 moving average, that's normally a good sign to sell, which we can see here. The price has gone over the 200 moving average and it's now in its advancing period. And then we can see here, it went under the 200 moving average and it just went down. So what we have is in the advancing period is a breakout from the accumulation phase. So it's no longer going sideways. It now starts to form an uptrend and goes above the 200 moving average. Then we have our distribution phase where we're now going sideways. Now this sideways bit here, if you're onshore, just look at the 200 MA. If it goes below the 200 MA, we are now no longer in a distribution phase, and it's very likely we're going to go into a decline phase. So this is now an area of danger. Hope everyone's with me so far, and it's not too complicated. I think I'm taking something really crazily advanced here and trying to break it down and make it as simple as possible for everyone.
If anyone has any questions, please do raise your hand. Please do ask.
Yeah, please do. Okay, so this is a bit more of an idea of how it would look on a chart, and you may recognize this pattern to what's happening right now on some of the charts. We have this area here, this accumulation zone, doesn't have to always go completely sideways, it can be going downwards and sideways, just staying in what we would class as a boxed zone. Then from there, this is the area where the whales are buying. They're just buying. And what are we seeing right now with a lot of the altcoins and a lot with Bitcoin? It's coming off the exchanges, but there is no news reports about it. There's no big information about it. Why? Because they don't want you to be buying it at this point. So they keep it quiet. What they will start doing is they'll start talking about it when it's up here in the excess area. Now, how can you tell that there's accumulation going on? Because random altcoins will pop up and go above 100 or 200%. Have we seen that? Yes, with Zilliqa. Yes, with Proppy. Yes, with Ethereum Classic. Yes, with Kyber, which is up 200%. So what ends up happening is this accumulation zone breaks out, and now the public start getting involved. But now the whales need to exit because they've made some profit, and they need people to get involved. So this is where they start pumping stuff in the media. People start trying to get in and trying to be smart. This is where they get all the newbies, and then it comes crashing down. Now, the reason I'm stressing on this is because in this next distribution phase, the amount the market could potentially drop is by 90% plus. Why? Because if there is a recession, the whales have already accumulated. So now they need exits to get out of their assets so that they can have cash to buy all of the assets again when they crash down to 90%. Let's make a case in point. If Amazon is currently $1,000 a share, if Google is currently $1,000 a share, Tesla is $1,000 a share, and then they do a stock split. So now the price of one share is $100, and then the price drops by 80 to 90%, they would then get that asset for around $10 to $20 a share, meaning they could buy a lot of it, giving them more power and control. Hopefully this makes sense. So what do we have? Wyckoff in a little bit more advanced terminology. So we have our accumulation, and then we have our spring. Our spring is the bit where it drops below what appears to be a support line. What is a support line? It's an area where it looks like a floor, where the price comes down, bounces off it, comes down, and bounces off it again. So this blue line is the support. This would be what appears to be a double bottom. And then if we break below this into here, this is a spring, because this frightens everybody and makes people think, oh, the pattern's over. It didn't hold this support. It's gone below it. Now, what you want to do is you want to set your entries just above here, because if they go above here, what happens? Or you want to set them just above here. So 2 entries that you can possibly set them. If it goes up, it'll come back down, and then you want to be all the way in it up to around 100% or potentially 500 or 10x. Now, most of the time in the markup move, it's a free wave move. Normally, we have one move off the spring, it bounces, a second move, it bounces, and then a third move. After this third move, it is very, very likely that there will not be another movement up. But guess what happens? This area here is now where everybody starts trying to get in, because they're like, oh, it went up twice last time and I missed out. Let me get in. But now we have a reverse spring where the resistance, which is here, will make it look like it's good to get in, because it will break through and people will think, oh, I'm going to get in. And then it comes just crashing down. I hope that makes some sense to people. Hopefully. Everybody with me? Let me just quickly read this question. Solid, unfamiliar. Makes sense. Okay, brilliant. Okay, so here is a better example of how it would work, because what you have is your accumulation zone, but the second accumulation zone, the second major one, will always be just a little bit higher than the first one. In fact, it will be almost as if you mark off this area here, the previous resistance, the second accumulation zone will almost sit on top of it. And this is when you can tell, okay, we are potentially going into the second accumulation zone. And then from there, you get your reaccumulation, distribution, and then again, your markdown. So best ways to tell that what's going on is the strong hands will be buying in this accumulation, and then there'll be a change of behavior and the way that the market is and the sentiment is. And then in this area here, the media will be saying, oh, it's bad, don't buy it. It's bad, don't buy it. Nobody will be interested in crypto, and our lessons will be very quiet. Then around here, they'll start getting a bit busier. And in here, this is when the media, especially Jim Cramer, will be shouting for you to buy, buy, buy. And so will BitBoy Crypto be telling you to buy, buy, buy right here.
Wow, shots fired. Listen, we don't hate BitBoy Crypto. We still appreciate BitBoy Crypto and what he's done, but he's just a bit too bullish on everything. So also, let me take this as an advertising opportunity. You can find most of our paid products and services at a very, very special link. This link we need to really, really, really push. blockchainsensei.gumroad.com, or just type in Blockchain Sensei Gumroad, or go to our famous link tree that has been clicked over 6,000 times. Can you believe that, Mr. Hardin? Our link tree has been clicked 6,000 times. So yeah, on the famous link tree you'll find it, but Blockchain Sensei Gumroad, this one link will link you to all our paid products and services, including but not limited to replays, ebooks, and our crypto swing trading signal service run by Mr. Spectacular. And also DM us the word student to blockchain.sensei, and one of us will personally see to you if you're interested in some one-on-one education. But yeah, back to Mr. Hardin.
Thank you. Okay, so reasons why we might be going into a recession is we had the inverted yield curve the other day. I mentioned that in the last week's episode. If you want more info on what inverted yield curve is, please go back to last week's episode. And one of the things that's happened is the Buffett indicator has gone a little bit haywire. So the Buffett indicator, when it goes above 100%, is normally when we have a market crash. So we can see went way above 100% in the dot-com bubble. It got to about 150. We can see in 2008, it was still above 100. But after, so we can see, let me just draw it in here. So we can see it got to 150 in the dot-com bubble. Then we can see it dipped below here. It was a good time to buy in that crash. And then what happened if you held from 2000 to 2020? You were making tracks. You can see what happened is it then dipped over 100 again in 2008 and then came down. And right now, we are technically higher than we have ever been before on this indicator. So what does this indicator do? How does it work? Why does Warren Buffett use it? Basically, what he does is he takes the value of the market of all the stocks and divides it by the GDP of the country. And if it's too high, then it clearly means that the assets in the market are too high. Does that make sense? Hopefully that makes sense.
Wait. I did not. I'm learning something here. Say that again. He does what?
Takes the value of the market and divides it by the GDP, which will give you a ratio of how overvalued the market is in comparison to GDP.
So, but by the value of the market, do you mean like the S&P 500? Or
yeah.
Right. Okay. So would that be like the market cap of the S&P 500?
Pretty much, yeah.
Okay.
So we can see at the moment we are 70% higher than the long-term trend line, and 218% of the ratio of market value to GDP.
Yeah, this is due a pullback.
Just slightly. Now, where am I expecting it to
pull? We're going to a recession, guys.
I'm expecting this to pull back to below, to probably about here, maybe if we're lucky. But if the shit really hits the fan, we'll go down to like 2008 prices.
Make sure we sell.
Which is why I'm personally gonna just go to cash. I'm gonna go to after I've taken profit after this cycle, after this next pump. I'm gonna go probably 70% cash, probably stable coins and just some cash and just buy stuff. I'm just very wary that people are gonna get caught in this top, get destroyed, and never invest again, which will be a shame. And a lot of people are going to lose a lot, and they would have lost their pensions as well. So, and why do I think they'll lose their pensions? Because a lot of pensions are tied to the stock market, and we're about to get into something as well. So this is the other thing, the other indicator, which is the Shiller PE ratio, which is the price to earnings ratio for the average thing on the stock market. So again, we see the 1930s depression, Black Tuesday. So the Shiller PE ratio is basically the price to earnings. So the price of an asset to how much it's actually earning. So if it's too high, it's not really a good sign, because it means that things are priced way higher than what the company's actually earning. So the average of the stock market at the moment is around 40, which is we can see what's happened every time it's gone above this area. So if we get a little bit more of a pump and we get to around 45, you can kind of guess what's going to happen. So keep that in your watch list. Keep a close eye on the Shiller PE ratio to just figure out what's going on with the market and what might potentially happen. So the indicators are in. So that's 3 indicators. That's the Shiller PE ratio, the composite Buffett indicator, and also the inverted yield curve. So all the signs are coming in. Now, the reason that I've been saying this for about 5 years, from when I first found out that pensions were attached to assets in the stock market. So one of my close friends, shout out, I actually can't shout out her name. She was a white collar crime investigator. And one of the things she was looking at was the fact that British home stores had been overly investing people's pensions. So basically, pension funds invest in things on the stock market, but then the companies then use their pensions to invest in other things. So that would be like Apple will invest their staff's pensions, or the New York Fire Department will invest their let's use New York Fire Department because it's a good example. New York Fire Department and the New York Police Department have got two of the biggest pension pots in the world. So what they do is they invest their pension funds into things like Apple and Microsoft because it's a good way of guaranteeing that the people's pensions are beating inflation. Now, what Apple will then do is they'll then invest some of the cash that they've got into things like Nike, into things like Microsoft, and make even more money. But what happens if a company that a big company has put all their pensions into isn't managed correctly, like Tesco? What happens to number one? You lose all the pensions of the people in Tesco if Tesco collapses. Then you also lose all the pensions of the people of the companies that invested in Tesco, and then it pulls down the FTSE, and then I guess it's just a big mess. Now, the reason why this may happen even more so is because the baby boomers, that's people that are aged now between 60 and 70, people that were born between 1947 and 1965. So that's my mom was born 65. So these people are now coming to retirement, but the majority of the world's wealth is stored in their nest eggs, in their pensions that they've been waiting for to retire on. Now, if they're worried about recession, they're going to take out more money than they were going to take out. But are they going to take out money anyway? Yes, because they need to, because they've just retired. So then what happens? If people start retiring, which they're going to start doing because of COVID and everything else, people are going to start retiring earlier, and more people will start retiring. If anyone starts panicking, it's a downhill spiral from there. So that is, that's pretty much everything. So we'll take some questions. Oh, actually, no. Before we go to questions, let me just go to the charts, and you might see some of the stuff that I was talking about. Look at this. Does anyone remember that I said that there's a strange pattern that happens with accumulation zones and distribution zones? And then look, dipped just below this support. So this area here has got massive potential for a spring. Let's have a look at another one. Let's have a look at polka dot. You can probably see it now that I've shown it you. You can probably see it a lot clearer. Accumulation zone. And then we can see it here. Distribution zone begins here. Change that one to red so it becomes a little bit clearer. And then it started going down. And now, what does it look like we're in right now?
Come on, someone say it. I don't want to say it.
Accumulation.
Accumulation. And now what would make me think it's accumulation? Because Polkadot is a crazy asset. And at one point it was $14, which is bizarre. So let's pick one more. Let's go with. Oh, actually, I know a good one. I know a really good one. Axie was looking really good earlier. Axie. I'm showing off my whole portfolio here now. Oops.
There's literally an episode where Mr. Harden gives out his whole portfolio, so it's not much of a secret.
Axie. Again, you can see the support line here. That's just a perfect dip just below. You can probably see the distribution accumulation zones a little bit clearer now. Accumulation zone. Clear as day distribution zone. And then if we whack in the moving average, it'll probably make it even more clearer for you. I'm not going to go over the RSI because then I'll be giving way too much game in this episode. This episode is pretty much a paid lesson.
We appreciate you, though.
So good.
Love, homie, love.
So there we go. 200 moving average. You can see, boom, price crossed over the 200 moving average. Boom. Now started coming down. Distribution. Now it's gone below it. And look what looks like might be about to happen again. Textbook. But this would probably be there, and then the spring might be just a little bit lower. If it drops out of that, bam. That combined with the RSI is a pretty solid technique. So let me just go to these questions. It makes sense. It's definitely worth a rewatch. What was that? Pump definitely due to happen. Go to 2,000 net places. I'm seeing money bags got bounced. Thanks for the knowledge. Bombs. It's always love you guys. Boom. Perfect. So if you've learned anything in today's session or got any game from today's episode, please type game in chat. Thank you. Thank you very much.
Hey, even I learned a lot. Like, I'm very familiar with what you taught up until the point where you was talking about the split with basically market cap divided by GDP.
Big plug. Big plug.
Plug. And you know me, I love my maths. So that just makes so much sense.
Yeah, you can tell if something's overinflated. But yeah, we've got a few people on the call, so I can probably take and answer a question from everybody. So we'll start with Mr. Jason K. Jason K, you've been unmuted. Have you learned anything from today? What was your favorite bit of today's episode? Is there anything I can help you with? Any charts you want me to look at? Well, not me, us. No, nothing from Jason K. Okay, we'll move on.
Jason, you know, interestingly, Jason actually came from Twitter, so you might be feeling shy.
Oh, okay, fair enough. Let's go to Elliot. Elliot, you've been unmuted.
Hello. Greetings, everyone.
What's good? How you been?
I'm not too bad. Yeah, I got a session tomorrow with Ninja. I learned a lot today. I don't have a specific question. Just need to prepare for this recession, basically.
Yeah. But the main key of what I'm saying to people is make sure you don't get greedy when this market pumps.
Yeah, well, I've been the opposite. I haven't taken profits where I should have because I've been a bit hesitant, but that's allowed me to see the waves of ups and downs and not be fazed by it. So now I do need to start executing in the right fashion. So yeah, if it's going to be a bad recession coming in, then I'm ready to be prepared.
Yeah, man, that's it. And the thing is, what you got to remember: if you take profit, even if we don't have a recession, the market's still going to dip at some point.
Mm.
You are always going to get a great buying opportunity. You just got to wait for it.
Yeah,
The
yeah.
hardest bit is just wait. So that's what it is. But yeah, man, appreciate that, Elliot. Appreciate
All
it.
right, thank you.
Before Elliot goes, could Elliot just give a quick live testimonial on how you know blockchain sensei and how the lessons have been going 101? Can I just pause for a second? Can I just pause just also add one thing that Elliot said, yeah, because I said to Elliot, one thing that I really appreciate about you is that not only do you pay for 101 lessons, this guy is a high attender of multiple Zooms, bro. NFT Fridays, the real estate show with Zishan, and the game, and been watching our YouTube. And you know what he said? He said, the free knowledge you give out is invaluable. Got the voice note, mate. Made my day.
Yeah, you just said it already.
Man, well, we just shown what happens. We give out this game, but then when you pay for stuff, you get things like Proppy, you get things like Kyber, that whilst the market's been down, let me just show everyone how Kyber's been doing. So most people have been in, let's see, what have most people been?
Wait. Can I just want to get a quick testimonial.
Oh yeah, go on. Get your testimonial.
Yeah. Greetings, everyone. I saw you guys at the EYL event in Mayfair, and I didn't know who you were, but you're the only Asian guy that was in a crowd of millions of black people, so you stood out. So when I came home and I'm going through the socials, I saw you guys again. So I was like, hey, who are you guys? Followed up, saw that you do these sessions on YouTube, started watching a few, and then on one of the free sessions, you announced or you asked who wants to be one of my students. So I was like, yeah, that sounds like me. So I messaged, and I've had 2 lessons with yourself, Ninja. I've had a lesson with Storm on NFTs. They've been, like you repeated earlier, they've been invaluable. I'm just collecting the information, and I've put on a few other people as well. So yeah, long may it continue, and you lot are doing great stuff, and it has been valuable. I have no connection to you guys, so I'm not being paid to say all this stuff.
No.
Yeah, I'm just a curious person that is not afraid to make connections and to pay for things when I need it. So yeah, more power to you guys, and yeah, I'm enjoying as well.
Bro, the fact that you said the free content is invaluable.
Yes, it is.
Love that. The free content invaluable, but the paid content is life-changing. So let's just give an example here. So most people are in Doge, which is 85% down. Most people are in what things do we think most people are in? Most people are in Binance, which is, how much down is this? Most people are definitely in BTC, Ethereum. So Binance is 41% down. Then we've got BTC, which we know most people are in, which is down from the top 38%. Most people are in ETH, which is also down 36%. A lot of people are, as we know, holding on to XRP for dear life and have not been making money in these other things this whole time, which it's not just XRP, it's things like Doge, ADA is another one that people have become a bit cultish on and have missed out on gains and other things. Down now 68% on ADA. So let's have a look at XRP, the other one. From the top, people are down 60%. Whereas in our paid sessions, we mentioned things like, where is it gone? Kyber. Like Kyber. That if you've been in since October, when we mentioned it, which is around here, you would be up 222%. Same thing with, what's another one that we mentioned? Property we've already done. It's a nice little spike. What's another one that we mentioned that we switch people to? But yeah, I'm sure you're getting the gist. But these are the things that you get in the paid sessions. We don't give that game away. So let's next go to Josh Adarinto. Oh, let me answer AJ's question first. What do you think will happen to how pensions operate, work in the future, and how will crypto influence that? People will just get universal basic income. But what will happen is people will be so dependent on universal basic income because they won't have any financial literacy. They won't have any assets. They won't have anything, that they will literally just have to do what the government tells them because they won't have any money outside of the universal basic income, which is the scary thought.
Do you think that there'll be pensions that incorporate crypto into
there will be in the future. Yeah, in the future there'll be some. I've already seen a few in America, but none in the yet that basically pay out your pension to you in crypto, or you're investing and part of your pension goes into crypto assets. That's starting to happen, but only like 1% of all of it will go into crypto. But even 1% of your whole pension going into crypto, you'd be up if it was the right crypto status. Whereas, yeah, like I said, I'm just very worried about CBDCs and the control and power that gives governments in terms of, yeah, it's very interesting in terms of what it allows governments to do if you step out of line, or if you have thoughts, views, attend places, go places. If you don't have assets or don't have any financial literacy, you're going to be in a bit of a tricky one. But that's that one. Josh, what's up, homie? You back in the country?
Yes, I actually saw him.
Yeah, I am back.
Jeez, this guy's been lifing.
Living life, bro.
He's lifing, bro. He's out here, bro. He's outside.
No, it was good. I had to come back because my finances definitely took a hit in the sun, but it was great. It was worth it. It was worth it. No, it was a good time. But now I'm back. I'm back to lessons of Hardin because I commit to 2 lessons a month, but the sun was calling my name, so I had to run away. But yeah, what did I learn today? I think I learned to just bite the bullet on kind of taking the gains that are in front of me and then kind of actually finding an exit so I can just chill. So I was actually looking at other physical assets I could buy other than cash, because obviously I can't buy a house yet. But when you guys said that you had less of your money in cash, like during the recession, would you not like have your money in an asset like a stable coin? Is that what you're saying? You're putting most of your money in, or you, I don't know, you buying Lego bricks or something else to kind of make sure you stay kind of afloat in this recession time? Because of course you're not in cash, so what are you in?
Yeah, so what it would be, it'd be a case of taking profits when we're not in the recession, like you said. So not being greedy and going, right, stop it, Michael. You've made 100%, you made 500%, take some profit. Putting that into a cash pile that would then go into more stable assets like, don't want to say silver, but silver, gold, stable coins, cash itself, or yeah, just things like that is very unlikely that they're going to drop 80-90% in value.
Okay, so definitely not stocks, definitely not normal top 100 coins, but instead like stable coins,
yeah,
commodities and physical cash and bank balance, keep it all in fiat and stuff.
Yeah, but then obviously you want to hold on to some of your portfolio like Buffett's done, So he's holding 65% of his portfolio, but he's in 35% cash, ready for when everything does drop or does pull back.
You can jump in instantly.
Yeah, you've now got that cash to deploy.
Okay.
And that is when most millionaires are made, and when most billionaires are made is in market crashes, especially ones like the magnitude of what might be happening. This is how the Rothschilds were formed. This is how the JP Morgans were formed, the Goldman Sachs, because in the 1930s crash, they bought everything up. But now we're going to have, instead of these big banks and instead of oligarchs, we're going to have webigarchs, that people that control, that buy massively during this next crash are going to be the people that control and run the digital world and the world.
Okay, sessions with me and you will start again from next week for sure.
Okay. Appreciate you, bro. Appreciate you.
Thank you.
Let's next go to Devon Hart. How you doing, buddy?
What up, homie?
We need to rearrange your session with Storm, because you asked for an NFT session with me, but it's Storm's the NFT wizard.
Yeah, I was supposed to. I actually had some like family stuff come up. That was why I missed that first meeting. But it'd be cool to meet with you and Ninja D though.
Okay.
For the either NFTs or just like, because I know Ninja mentioned just like talking in general, so that would be cool too.
Yeah, that's cool. That's cool. Let's do that. If you want to do that, that's cool with me. Cool. So yeah, what did you take from today's session?
I was really paying attention to the swing trading because I'm not down on any of my crypto positions, and I've actually taken profits, but I've stored my profits in like ADA or like stable coins and stuff. So just taking notes on which like how to really pay attention to the swing trades, because
your signal's going a bit funny.
Yeah, my bad. I'm actually driving right now. I'm supposed to be going to the city.
I've got a strict policy on people being on Zoom and driving, so I don't.
Please.
Yeah. So
yeah, it's okay.
We'll let you drop in we're gonna do a session with you anyway, so don't worry about it.
Yeah, don't worry about it.
I'm gonna leave my contact information in the chat.
Just book in how you booked in before on the calendar.
Okay.
I've got your contact information on it. I got your email and your WhatsApp already from last time. So yeah.
Okay, for sure. Thank you.
No worries. Fazana, good to have you back. If this is the Fazana I think it is.
Yep. Hi. How you doing? All right.
I'm all good. Yourself?
Yeah, I'm still away. I'm not in the country at the moment, and I thought I'll just. Yeah, so it's almost like just gone 1 a.m. here, and I thought, you know what? Yeah.
Wow.
Yeah, I just wanted to know what's going on, really, isn't it? What's happening in the UK? I'm a bit out of touch.
Oh, the UK is businesses are closing down left, right, and center. Yeah, politicians are still doing what politicians do best. You're not missing anything.
Okay. So I hear that you touched on a recession. What's going on there? Because I know the interest rate's gone up and inflation's risen for food and stuff. There's a big hoo-ha about that and petrol. So what's going on? I mean, in the forecast, because I haven't joined in much of the session, I only caught possibly the last quarter of it. So, I mean, what would you say what's going to be happening in, say, the next, coming months?
The next coming months were very likely to get a big pump because if everyone has calculated that there is a recession coming, which from all the indicators that I went through in the last 10 minutes are showing, all the big companies are doing stock splits, which is also a sign that something big is coming. All the signs are in place. So what that would mean is that all the big players want to get out of their positions and take profit. So to do that, they're going to need to pump the markets up crazily. So a lot of positions, stocks and crypto over the next couple of months should go absolutely crazy. Like, just because they need to make the markets look so attractive to somebody that doesn't know what they're doing, that kind of like it was during that whole GameStop-y Dogecoin phase, they need to make it look that attractive so that every man and his dog gets involved, and then it'll crash from there, and then people will be like, you know what, I'm never investing again because it's a scam, it doesn't work, and then everyone will have to go to the banks for investment advice. And then the banks will be like, oh, look at that. You should always come to us. And then they'll give you 10% if you're lucky.
Sure.
That's the gist, is this time when things go up, make sure you take some profit.
Yep. Okay, that makes sense. And then hold on until it dips again, and then you buy back, but you buy back better, innit?
Yeah. But the dip, you want to wait for a big dip. You don't want to wait for like a 20% dip. You want to wait for like a 40 to 50% plus dip.
Okay, cool. Okay, it makes sense. So we'll just keep in tune with what you've posted on your group, and I'll just try to tune in also to this whenever I can. And I'm going to get the young man to be in touch with, because I'm not back yet, not for a while, possibly not till December. Got a lot going on here. So what I was going to say though is I picked up on somebody that you've got on board now, your team, somebody by the name of Storm, is it, who deals with the NFTs?
Yep.
Yeah, that's Storm, head of NFTs. She's amazing.
Okay, cool. So what you could do is send me some information later on WhatsApp, and then I'll get young man to be in touch with him if he wants some sessions.
Yeah. Okay, cool. We can sort that out. Definitely.
All right, and it's good to hear from you guys today. Well done. Keep it going.
Always. Thank you for tuning in, especially at 1 o'clock in the morning. Appreciate it.
Yeah, thanks.
No worries.
Take care. See ya.
Next up, we'll go to the man, the myth, the legend. That is Mr. George Brown.
Let's catch up, George.
What up, man? Like George?
I'm just chilling, about to eat some dinner. I've not really got many questions at the moment, I guess. But yeah, just thank you again for providing this knowledge, because, bro, like, think about the information you're just putting out now. If only the world could tune into what you're saying right now. There's like, yeah, it's so, yeah, it's valuable. Okay. So just thank you as always, guys.
No worries. I will ask something though. I will ask for a new vegan food shout. You're the king of
new vegan food shout. What are we saying? I don't know. What am I thinking of?
What was the name of the place that you got the burgers from?
You know what? Just Temple of Satan every time. Temple of Satan every time, because they do the best vegan chicken anyway.
Actually,
I need to try out some places. Also, shout out Biff's Vegan Wings and Burgers and stuff, because they fucked up in an interesting way, but came around and resolved it with very good customer service. So, until someone turns an L into a very positive experience, you got to shout out places like that. It's the recovery.
Biff's what? Biff's Vegan Wings?
Yeah.
Okay.
Like, they fucked up, but the co-founder, had a nice conversation with me, and it was, I appreciate people that fuck up and they don't fumble, they catch the ball again.
Oh, I like that. Elliot, you was going to say something.
He's just put in the chat, oyster mushrooms are better than as your vegan meat replacement in the comments.
If you want. I mean, also, it's a different texture. It's a different texture. But I definitely agree. I've done good oyster, mushroom, fried oyster mushrooms as well before. Oyster mushrooms are good, but sometimes the texture can be interesting. But yeah.
We might as well take this live opportunity, because basically AJ and I'm in a group chat where it's me, Keish, who's our DeFi educator and technical director, AJ and George. And AJ and George basically helps fund our most viewed content to date with the legendary Ian Dunlap. We need to upload part 2 as people are asking for it. But as we're live on the call, might as well ask, do you guys happen to be free this Sunday? Because we've got a huge piece of content that we're filming on Sunday, 1 p.m. to 3 p.m.
I'm like potentially, but I know I've got. Wait, Saturday or Sunday? Did you say?
Sunday.
Maybe. Let me double check something. Things are a bit.
Yeah, just let us know on the in-house productions group chat.
Okay.
Is that Ninja? Is that next Sunday? You said.
No, it's this Sunday in West London.
This Sunday on the 23rd, on the 24th.
Is this Sunday the 24th?
Yeah, I'll be. Yeah. I'm like I keep mixing up because it's bank holiday and it's Monday, and I keep like thinking it's Sunday, but it's obviously Monday because of the crypto. So, I'll be away. I'm going away to some sun.
Oh, nice. Have fun. That's cool.
Thank you. So I won't be here. I'm sorry about that, but I would have loved to have helped otherwise.
That's
as
all right.
usual. Yeah.
Also, because not emphasized it so earlier today, for anyone listening, second ever Blockchain Sensei real estate content tomorrow 6 p.m. with Zishan, Airbnb flipping lessons. So if anyone wants to come to that, that's in the link tree.
Got 2 more questions. We got obviously AJ, who we saved the best till last. But before that, let's go, Mr. Terrell Ivy Low. What's up, broski?
Hello?
Yo, what's good?
No, I really didn't even have a question for you guys today,
Okay. What did you learn today?
Mainly about the patterns of the charts that you're talking about. I do know about chart patterns already, but it just made a lot more sense when you just went through it today. So that and combining it with the RSI, I think that's useful.
Mm-hmm.
But with me, really, I'm just focused on like stacking my money, like my fiat right now, just so I can invest, because I need to focus on that before I can really do anything else, to be honest with you.
Bro, that sentence right there is the key, because you can have all the dips in the world, but if you haven't got the cash flow, then there's no point, which is a great reason to watch Zishan's show, so you can figure out ways of getting cash flow and then putting it into your investments.
Yeah, just preparing for the dip, man. That's it.
That's it, man. That's it. Cash flow is king. Absolutely king. But yeah, thank you very much, Mr. Terrell. Last but not least, the one, the only, AJ. What up?
Okay, so I don't really have a question, but I'm really grateful for this information that you just laid out, the 4 market phases and accumulation, advancing, distribution, I think it was, and declining, all of these. I think that was really interesting for me personally to understand better, because I think I had an idea of it, but then the way you sort of presented it was really clear, like super clear to me. So now I have even better understanding and I want to actually get even more into it.
Perfect.
And yeah, just everything that you guys presented today is, as usual, game. It's amazing knowledge, and just really grateful to be here.
Oh, thank you. Thank you very much. Well, I'm sure we can all see on these assets now. The reason I was hanging around on Audius is because that's the original, that was one of the first projects George shouted out to us, which we made some buck off. So big shout out to George on that one. But I'm sure you can see this accumulation zone here, the spring, the distribution zone. So here is a tricky one because it had the 3 waves. Look, 1, 2, and then the 3rd pump. Then from there came down. And then it went below the 200 moving average, way lower. But you have to bear in mind, if you got in here in the accumulation zone, even when it's all the way down here, it's still up. And the same again. Yeah, I would definitely say on Chainlink, right now we're entering the accumulation zone. Let's just draw this in. Boom. So yeah, very, very interesting times. Right, guys, amazing episode. Thank you very much. Love.
Guys.
Thank you.
No worries. See you in a bit.
Much love. Take care.
Love.